Everybody, it was a rough market on Friday. Everything seemed to go down. I think my energy transfer went up on Friday. How'd you guys do? I mean, it's been such a bull run this year. Almost every week is just like it's an up market. So it's good. It's good. Corrections are good. You don't want to just see a constant growth. Corrections are opportunities for you to buy. What's a good value now? It's so hard to find, right? I remember I was looking at Rolls-Royce a couple of years ago when it was I guess I'll look at RACI, the American stock. It's $5, but it was pretty low. Alex, what's up? How's it going? I feel like it was easier to read these charts. Full screen. Rivian is a beat down dog and the company is good. I've been seeing a lot of Rivian cars when I drive lately. I don't know why. Like maybe it's easy to identify because it's a big Rivian. Most cars, I don't know. You don't really know what kind of car it is unless you're familiar with that make. But like, it's not like as visible. Well, Tesla is kind of obvious. But I remember I was looking at Rolls-Royce, and it got real low. So this is on the U.S. exchange. The main stock is on the London Stock Exchange. But it was. I don't think it ever fell below $1, but it got pretty low. Actually, no, it did. At the end of 2022, it got down to under $1. And I thought it was a good buy. Nice, Amazon. I guess it's up similar to Meta. I want to compare the two. Because Meta's up about 400%. Okay, so in 2 years, I wish this used to be a lot easier to look at. I don't know why. Okay, so in 2 years, RACI is up 300%, which is crazy. Let's just okay. See, so the bottom, it was 80 cents. I usually don't buy OTC. Do you guys buy over the counter? Because when I try to buy over the counter stocks, it's not like that easy. Because there's less of a market for OTC stocks. They're not as liquid as a regular stock. So when you put through a trade, it might take some time for someone to sell to you. But on a stock on a major exchange like the Nasdaq, like you put through a trade, it'll get completed right away, less than a second. Obviously you have to trade at the market price. So it's up a lot. It's just hard to invest in OTC stocks. I mean, it's a good company. I mean, you don't want to invest in an OTC stock with 50 million market cap, but it's a pretty big company, Rolls-Royce. I mean, the reason it's OTC is because it's not a U.S. company, and they're not paying for it to be traded on a major exchange, because it's not cheap to get traded on a major stock exchange. So now it's up like literally like 5x. It was from 80 cents. It's come down the past few weeks. It got up to like almost 550, like 540. So now it's back down to 5. So I can't see the upside with this stock. I did a video and I did a video on the stock that trades on the London Stock Exchange, because they report all their numbers in pounds, so it's just easier to use that. But it's the same result whether I did it on the OTC or any stock exchange. It's the same numbers. So I have them at a 15% discount. I years ago I did a video on Rolls-Royce. I wonder what I had it at. Damn, I should have bought it on $1. I guess a lot of stocks, it seems after the fact, I should have bought it. It was so obvious. In July 2021, I guess that was the first one. And look, it was $1. What happened? Oh, let's see the valuation. I had it at $3, so it tripled from that point, but it's up to 5. Let's see what it's. I don't like the new Yahoo Finance. I like the old one better. So on the London Stock Exchange, it's 400 pence or £4. Do you know why they trade in pence and not pounds? Because on the US Stock Exchange, we trade in dollars. Like if a stock is trading at 50, it's $50, not 50 cents. But everything is in pence. So it's 404 pence, all the UK stocks. I read back in the early 70s when they changed their the way their currency is, that very few stocks were above £1. So they just traded all in pence. So it was just easier for people. I mean, they've been killing it, Rolls-Royce. So Rolls-Royce is a really old company. I think they started in 1886. So they started out making aircraft engines. They were an aerospace company, and then they added the cars, the Rolls-Royce cars. I think it was maybe 1905 they started selling cars. The early 1900s, and they stopped selling the cars. I think that part of the business went bankrupt, and the Rolls-Royce cars are made by BMW today. So if you see a Rolls-Royce, a new, a more current model, it's a BMW. BMW made that Rolls-Royce. So Rolls-Royce doesn't make cars anymore. They just focus on the aircraft engines are probably the main product they sell, but more things tied to the aerospace industry, not the vehicle industry. You probably knew that, but I know there's some people who's probably still think they make cars. I mean, their numbers improved a lot. Let me see. let's get to their that's a hard chart to read. So revenue in 2022, 13.5 billion pounds, up to 16.5 billion. So a good growth, nothing extraordinary. But their gross profits are up a lot, from 2.7 billion to 3.6 billion. Operating profit. And let me bring the chart into Excel so I can show you like the margins and everything. Rolls-Royce. Hey, Chris. What's going on? Yeah, they don't make cars. Maybe in the 1970s they stopped making cars. What the hell? Can you change to green screen to Rolls-Royce lot? What the hell? It takes so long. Okay. Revenue 16,486. So up 22%. Gross profit 3620 to up 31%. So their margins up a little bit. 22% gross profit margin compared to last year of 20%. Operating profit 1944 837. So that grew a lot. Operating margin, it's usually as a percent of revenue to figure this stuff out. Their operating margin went double from 6% to 12%. They really trimmed down their operating expenses. You can see their R&D is less. With higher profit, higher revenue, their R&D is lower. It was 900 million, now it's 700 million. And their admin costs are pretty much flat. 1.1 billion in both time periods. So they did a really good job at cutting expenses. Net income, you can't really compare it. It went from negative 1.1 billion to positive 2.4 billion. So they had a negative 9% margin, a positive 15%. Iran just started attacking Israel. They just started? I thought, is that new? I thought they've been attacking them for like 1,000 years. Iran versus Israel, how potential conflict could be. And their cash flow went up a lot. Their operating profit went from 1.5 billion to 2.5 billion. That's 2022 compared to 2023. They still don't pay a dividend. They used to pay a dividend. I think the last dividend they paid was in 2019, but they did mention that once they strengthen their balance sheet, they will bring the dividend back. So they talk about the highlights. Operating profit 1.6 billion, margin of 10%. They had record free cash flow because pre-COVID, like 2019, they were making money, and this year was their record, 1.3 billion of free cash flow. They lowered their debt a lot. So free cash flow was a record 1.3 billion. And the projection for 2024 is 1.7 and 1.9. So it's a lot higher projection. Here's their revenue, 16.5. So here's the 11.8% margin, which is what I have right here. 11.8% compared to 6.2%. So really profitable relative to last year. Operating cash flow up $1 billion. So the way a company like this makes a lot of money is, I mean, you might think of them, they're actually the second largest in terms of, so behind GE Aerospace, GE Aerospace is the largest manufacturer of aircraft engines. They're number 2. In the whole world, they're the second largest manufacturer of aircraft engines. And a lot of people don't realize that. Like, that's a pretty significant stat, that they're the second largest in the world. So obviously they make a lot of money selling aircraft engines. but they actually make a lot more money servicing aircraft engines. I'll show you what I mean. Their revenue, it's like 60-40. Let me see. I know they have it down at the bottom of the. Okay. So of the 16.5 billion of revenue, 7.6 billion is from selling the physical engine, the equipment. 8.9 billion is servicing, revenue from aftermarket services. Let me bring this chart in. So that's their revenue. So equipment is 7,635. And then servicing is so 46% of their revenue is from selling the equipment, 54% is from servicing. I wish they showed the margins for each of these, because they just give us the gross profit for both. The gross profit on the 16 billion is 3.6 billion. But most of their profits are from servicing. That's why during COVID, planes just weren't being flown that much. There was less people traveling, things like that. So there's less of a need to service those aircraft. So that's why the companies like this didn't make as much money. Not because they were selling less equipment, selling less engines. It was just the servicing. They weren't servicing them as much. And that's where they make most of their profits from. Because the engines, it's expensive because they have to make the engines, right? They have to buy the materials and then manufacture them. But when they service it, it's pretty much all profit. You just have to pay someone to service it. But you don't have to actually make anything. You just have to go there and maintain it. So that's where all the profit is, all the margin from servicing. But I think we missed the boat on this one. I don't see I really don't see much upside. And they've done a lot of dilution. They've added a lot of shares, so I just don't see. I mean, maybe I get it. Maybe it might double in, like, I'd say 4 or 5 years, but I just don't see that much upside. If anything, I see it pretty much trading sideways or even coming down a little bit. Because you can't really look at the stock price. The stock price is kind of meaningless. You have to look at the market cap. 34 billion market cap. So it's not a small company. It was 1/5 of this. So it was like 8 billion at the bottom, I guess, in 2021, 2022. And it's up. This is the one in in the UK. So this is in pence. So yeah, so September 2020 was the absolute bottom. It actually fell below 50 pence, which is 1/2 of £1. But it still came down pretty low at the end of 2022. It was at 68 pence. So it went from like in the 40s, and it tripled from the 40s. Then it went 140, and then it came back down. So if you bought it, I guess at this point in the beginning, at the end of 2021, at 160 pence, you would have been down like 60%. But if you had the balls to hold on to it, you could have, tripled your investment. But you have to wait 2.5 years to do that. It's kind of a long, slow process, the stock market. But yeah, so what's the driving growth for 2023? So large engine flying hours. That's how they make money, because the more planes fly, the more servicing they need. Because after a set number of hours, they have to be serviced. I think it's like a law, like it's like a rule, because they want to limit the amount of accidents. So large engine flying hours in civil aerospace recovered to 88% of 2019 levels. So they're still not at 2019 levels. They're 88% of 2019 levels. So it's getting closer. But it's still a big jump from 2022, up 65% from 2022. But orders are at the highest level in 15 years. Because I think companies, even though they're still not flying as much as 2019, I think airlines are seeing the potential. They're seeing it's getting close. It's getting busier. So they need to get more engines. And plus, some planes just get old. So even if there's a COVID type thing and there's less travel, eventually you're going to need to replace your engines or replace your planes. And that's the heart of the plane, the engine. That's the most expensive part. So the body of the plane, you could use that body. It's kind of like your body, on the outside. It doesn't. If you don't look good on the outside, doesn't mean your body is going to give out. It's your heart and your inside is how you function. Interesting, major orders came from Air India and Turkish Airlines. Those were the major orders. So not even American companies. Air India, that must be the biggest airline in India. I wonder if that's government subsidized. Air India is a flag carrier airline in India. It is owned by Air India Limited and Tata Group. Rumors were true. What do you mean, rumors for what? The airline has its main hub at Indira Gandhi International Airport, the second hub in Mumbai. The airline's second largest airline in India in terms of passengers after Indigo. So the second largest. And then Turkish Airlines. It's probably the biggest in Turkey. It operates scheduled flights to 340 destinations. The airline serves I would imagine it's the biggest airline in Turkey. But they're a big defense contractor too, so they do a lot of business with the UK government because the government spends a lot of money, and of course they need aircraft and they need planes. But they spell it with a C, not an S. So defense with a C. The AUKUS submarine agreement was announced. The AUKUS agreement. AUKUS, that must be UK, AUK. AUKUS. Oh, okay. So it's Australia, UK, and the US. How was stock research changed since you started? I mean, it's just easier because of the internet. There's just more information, and there's more people out there giving their opinion. Okay, AUKUS. So that, yeah, they do submarines. They have a submarine division. The AUKUS submarine agreement was announced, which will be supported by the expansion of our submarine site in Rainsway, and work on our future programs in the UK and the US progressed well. In power systems, we're capturing strong demand for power generation solutions and services in the rapidly expanding data center market. I wish they gave a breakdown of sales by country. I don't think they do in this. I would imagine it's mostly in the UK, but it would be interesting to see what they do in other countries. I just ate a croissant filled with cheddar cheese. That's really good information. Thanks for sharing that. Rolls-Royce provides nuclear propulsion for AUKUS submarines. Yeah, the nuclear propulsion. Because submarines, I mean, the body of the submarine is not nearly as important as the propulsion, the engine. The engine is what does all the work. Of course, the body is needed. It's just like the body of a car. The body of the car is not nearly as expensive or complex as the guts, like the engine and transmission and those things. So this company kind of manufactures the heart of these, because it's hard. Could you imagine how hard it is to make an engine, an aircraft engine? To make the body of the aircraft, I'm sure a lot of people can do that. People who are handy, of course. I'm sure there's a lot of people who can do that, but there's much less people who can make the engine. It's very, it's a much more advanced thing to do. I just don't see that as much upside. They really did a great job at cutting expenses. They're much more profitable. Operating profit rose from 900 million pounds to 1.6 billion. Cost efficiency benefits across the group. Underlying operating margin more than doubled to 10.3%. Also, if you look into AUKUS, there will be other countries joining lots of big contracts. Canada, India. Yeah, I'm sure it's a lot of countries. That's just a name. They're probably the main countries are these three: Australia, UK, and United States. But I'm sure as time progressed, more countries. These are probably the countries that kind of like spearheaded this initiative. Yeah, the partnership will focus on military, distinguishing it from Five Eyes intelligence. The following non-participating nations were all subject to media speculation of potentially joining. So Canada, India. When you sell to the government, it's almost like the best customer in the world, especially the U.S. government. Any government, but the U.S. government has the most money than probably anybody in the world. because they don't, not that they don't have to work for the money, but they don't have to do anything. They just tax us. They get their money from taxes. So we do all the work and we just pay the government money. So it's not like if you have your own company, like you have to worry about making things, or you have to worry about finding customers or finding employees, or, all these concerns about will these sales be enough. But the government, money's going to come in no matter what. Even no matter if it's the greatest economy ever or the worst economy ever, you're going to always get paid because taxes run the government, right? So it's just a great, and they have such deep pockets, the U.S. government, the amount of money they spend. Rolls-Royce has so much going on. They also expect dividend. Yeah, definitely dividend will return. I can almost guarantee that. And that may boost the stock price, because when they cut their dividend in 2019, I think it was, here, let's do it. I think it was November 2019, the last dividend they paid. It's right here. So the last dividend they paid was October 2019, and they paid about 4.5 pence. About 4.5 pence. It was 7 pence before that. 4.5 pence. October, April. Okay, so it was a semi-annual dividend. October 2019. I bet you will see a big decline in October 2019. So here, this was the last dividend. Oh, it's right here. I should I could have looked. Okay, right here. Here's a dividend. So the thing is, when a company eliminates a dividend or reduces the dividend, it's kind of like a signal to the investment community. It's saying we're running out of money. And it's a pretty clear signal, right? Even if they're not running out of money, if the company is doing really well, like lots of cash flow coming in, and let's just say they cut their dividend for whatever reason. Maybe they wanted to acquire another company, or maybe they wanted to conserve cash. I don't know. But if they cut their dividend, even if they're doing better than prior years, the stock will go down, because it's just such a signal to investors that there's concern. There's concern in the near future they're going to run out of cash. So that's just generally what happened. That's what happened with them. You see, it was 254 pence when they paid the last dividend. And I guess they probably, after they pay their dividend in October, people still think they're going to get the next dividend payment. And then a few months later, probably around this time, the company announced we're not going to be paying our next dividend. We're eliminating the dividend, and we're not sure if we're bringing it back. And then of course it comes way down. And I mean, who knew it would have come down to literally 40 pence from like 400, and we went down like 85%. But I mean, when would you pick it up? I mean, obviously the announcement came and then it fell off a cliff. So maybe at 100 pence, it would have been a good time to pick it up, right? But then that was in March 2020. 7 months later, you're down 50%. Well, it did crash. Everything crashed from COVID, right? But this crashed before COVID. This was in February. Maybe I can. They just started coming down before other stocks, before the COVID crash. Let's see if we can look at Okay, so this did come down with the COVID crash right here. This is the S&P up here. But you see how like it recovered. It only crashed for like 6 weeks, right? And then it came back up. This kept coming down. I remember looking at it when it was this low. But it's so hard to buy it when a stock goes down that low, because you're like, there's all this concern about the company going bankrupt, and I mean, it seems so obvious now, right? But you know, most of us were already down quite a bit in our portfolio. You know, I literally sold a lot of my portfolio in February 2020, and it wasn't because I had any inclination of a crash. I just wanted to pay off my home, and I wish I didn't pay off my home. I wish I would have put it back in the market. But I guess hindsight's 2020. This was, I think, the fastest recovery ever for a market crash. If you ever look at market, crashes are fast, recoveries are slow. You know, the average market crash is like, 3 months, 4 months. But the recovery, the average is like 16 months. It takes much longer to recover. It does usually recover more than before the crash, but the recovery is a much slower process. 2008, it was like 2 or 3 years to get back up to where it was before the crash. I remember there was a chart I looked at. Is this it? That is because Powell injected $4 trillion cash into the market directly to individuals and businesses. That helped the $4 trillion investment. That looked like a good chart, but I'm trying to find. There was one that was really good. Oh, this looks like it could be good. I mean, understanding the past does help, because when a market goes down, you have to kind of just sit there, and it's painful day after day after day looking at your portfolio go down. But you just have to hold out. You just have to wait, because if you sell too early, like a lot of people do, a lot of people, some people. I remember someone showed me they received like $50,000 from their parent who passed away, like in 2006 or 7. So they put it into the market, and then in 2008 they were down 50%. So they sold it all because they just assumed it would go to zero. And then I showed them a chart, like what the market, how it reacted over the next 15 years after that. If they would have just held out, they would have easily tripled. I don't know what they invested in, but I'm assuming just invest in the market. This is a pain index. I like that. So the peak was 1929, the trough and recovery. So the biggest decline was 79% decline. That was the Great Depression. And okay. So 1929 was the peak of the market. And is trough means the bottom? Is that what the term? Okay, that's the bottom. Okay. So the peak. So this is good. This is valuable. Let me bring this into my you just need to believe in the market. Because if the U.S. economy goes to zero, like if you really think like, oh, I'm going to sell all my stock because I don't want it to go to zero. And if you're invested in the market, like an index, if the market goes to zero, the money you lost in the market is going to be nothing compared to like the mayhem and the chaos in the United States. You're not gonna care about the money in your portfolio. You're gonna look for food because you're gonna be starving to death. It just wouldn't happen. It did happen. The Great Depression, people were starving. They couldn't eat. They couldn't find any work. It was a really rough time. So the biggest, okay. So 1929 was the peak. 1932 was the bottom. And then it took 4 years to recover back to where it was. This is not exactly what I was looking for. I was like, generally when you see market crashes, it's like usually like 3 to 6 months it takes for the crash to happen. Say the market was at 10,000 one day and there was a crash to like 8,000. I think the average crash is like 3 to 6 months. So, and to get back to the 10,000 originally, it takes about, it's something like a year and a half, like 18 months. So the crash is real fast, but the recovery is slower. But it usually comes back when it hits the 10,000 again, then it starts going past it up to 13, 14, 15,000. So say it hits a 10,000 again in 18 months. And then it grows over time to like, say, 17,000. However, it doesn't matter how long that was. And if it say there's another crash from 17 to like 12, it might take like 3 to 6 months to go down from 17 to 12. And then it takes another 18 months to go back up to the original 17. And then over the next few years, it grows to like 25,000, something like that. So it generally goes up over time. Check that M0 money supply. Bernanke injected. Okay. Gang, what's up? Blade, how's it going? Could you imagine 79%? The market, not just like, there's always going to be a few stocks, even some really big stocks that go down even 100%. But the entire market, that's like, what's the S&P at now? $511. Could you imagine the S&P went from 511 to 107? 79% crash. The second biggest crash was World War I, as well as influenza. A lot of people died from influenza. That was 50%. It got cut in half. The lost decade, or the dot-com bust, that was the big one. But there's also, I guess they lump in the 2008 crash too. So that also went down 50%. In 2000 to 2009. So if you invested, it's kind of like if you were unfortunate enough to start investing at certain times, like anywhere from like 2000 to 2007, if you started investing any time, because it bottomed out in 2009. Renaissance Technology, best stock pickers. I got to check that out. And in 2009, it bottomed out, and it took 4 years to recover. In 1974, it bottomed out. It took 9 years to recover. That's a long time, 9 years to wait. I think that's the longest. recovery it took. Nine years, sheesh. So this one took 7 years to recover. That was also 50%. That's from World War II and the Great Depression. This only took 2 years to recover. 2 years, 1 year. That's fast. Less than a year. (1903 to 1904). So that took a little over a year. 1891 to 1892. I believe the fastest recovery was COVID. It took 4 months. It bottomed out in March 2020. The peak of the market was December 2019. The bottom was March 2020. And it took 4 months to recover. This one took 7 months to recover. This one took 8 months. How long for market crash to recovery? Okay, here we go. It typically takes 5 months to reach the bottom of a correction. So if the market is crashing, it takes about 5 months from peak to trough. However, once the market starts to turn, it can recover quickly. The average recovery for a correction is just 4 months. That doesn't make sense. It's not 4 months. Maybe, no, it's only once it was 4 months. What the hell are they talking about? Only COVID was the only time it recovered in 4 months. And that was the fastest ever. However, once the market turns, the average recovery time is just 4 months. That's why investors, I think they're just trying to use like scare tactics to get you to invest with them. Like that's, don't invest in Covenant Wealth Advisors. They give incorrect information. How long will it take the market to recover? Okay, this is interesting. Okay, max time to recovery, average time to recovery. So I did a video on Pan American Silver. Are you guys follow silver or gold? So he has silver, ticker SLV. So 5 years ago, April 2019, it was 14. It was down to 12. I remember in April 2020, I bought 100,000 of silver. And I like to wait a year for tax purposes. So I waited till April. It was April 2020. So it's probably around $14. And then April 2021, I sold it. And it was like a little over 100%. Or maybe it was like 90%. I thought it was around 100, but maybe I was at 100 at one point. So it's close to 100. Gold, I did the same thing. I bought 100,000 silver, 100,000 gold. But gold, I only made like 30%, I think. in April 2020. Yeah, I got the gold here. The green line is the gold. And then so I sold it right here. So it was like a 20% jump from here to here. But silver was much more aggressive. I'm glad I got rid of it because they both didn't really do. It was just the past few weeks they both went up, but up to the beginning of this year, I wouldn't have made anything if I held on to it. Buy gold and silver. No, I actually want a return on investment. Yeah, I wouldn't buy gold and silver normally. I'll be right back. How did you buy the gold and silver? No, I bought these ETFs, GLD and SLV. But Pan American Silver, which isn't, they're in the industry gold, by the way, not silver. It's not performing as well as these stocks. So the blue line is Pan American Silver, which is up 44% in the past 5 years. I don't like this new Yahoo Finance. It's the old one. You can make the lines real thick. This one, it's harder to see. So in the past 5 years, this stock is the blue line. In the past 5 years, this stock is up 44%. Gold and silver are up 80%. This stock does pay a dividend. So if you add the dividend, it's probably close to 60%. So it's still trailing gold and silver. In the past 2 years, this stock is down 36%. And I don't even see the line for silver. This is what I hate. Like, I don't like this new Yahoo Finance. It doesn't really work that well. Okay, here it is. So in the past 2 years, silver's up 8%, gold is up 18%. This stock is down 36%. I know. I drink too much liquids, and eventually something's got to give on these streams. This stock is flat in the past year. Gold and silver up. Although in the past 6 months, this stock is up 38%. Gold and silver 25, 28. That was the past 6 months. So do you guys follow Pan American? Well, I'll just pull up their labor cost and energy went up more than the price of silver. Now, it should move with the underlying commodity. It doesn't make sense. I think the reason they went up a lot was that the Yamana acquisition. Well, before trying to look for their shares outstanding. Oh, is this it? The shares outstanding went up a lot. Now I know you were. I don't take that personally. Okay. So what is this? Okay. So if you look at their report, you see in 2022 they had 210 million shares outstanding. Now it's 365 million. So when a company's shares outstanding goes up dramatically, it's almost always an acquisition. If they're a startup company, right? If they're a new company, then maybe their shares are going up just so they can afford to pay their expenses and run their business. But when it's an established company, it's almost always an acquisition. But you probably know this if you follow this company. They made a really big acquisition. I think that's why the stock went up. Okay, is this it? Okay, here it is. Okay, so Yamana acquisition. So in March 2023, so it's not new. It's a year ago. They issued 153 million shares of Pan American stock in order to acquire this company. So they spent $2.8 billion. So, I mean, we don't want to see dilution, but if this is going to help improve the company long term, definitely want to. It's good, right? So after the share issuance, Pan American owned After this issuance, Pan American shareholders owned 58% of this company, of Yamana, while the previous shareholders of Yamana owned 42%. Is this a publicly traded company, Yamana? I don't think it's publicly traded, right? Yamana. No, it's not a public company. So that's why they did so much dilution, in case you were curious. As a result of the acquisition, the company received $260 million of cash and cash equivalents from Yamana. Huh. Okay, so Yamana was publicly traded. Okay, that makes sense. They were publicly traded before. Okay, because so when you look at the statement of cash flows, the purpose of the statement of cash flows is to record all the cash inflows and outflows over a certain period of time. So this is a 2022 and 2023 statement of cash flows. And the good thing about the first section, the operating cash flow section, is it takes your net income or net loss and it converts it to cash. So 104.9 million. So if you look on the income statement and you see revenue 2.3 billion, you see expenses of 2 billion, and then other things, taxes. Revenue minus expenses is your net loss. A net loss 105 million. So you might think this is This is not good, right? A net loss. But that's why I say look at the statement of cash flows just to make sure. I thought it was okay. Is this for the year? I guess it is. Okay. Okay, so they had a net loss of 104 million according to their income statement, but the income statement is their accounting profit or loss. It's not cash, because on the income statement there's a lot of non-cash items. The biggest one is depreciation for this company. Other companies use stock-based compensation, which is an expense that brings down your net income, but it doesn't affect cash flow. So you have to adjust your operating cash flow section to convert this accounting loss to cash. So they actually generated 450 million of cash, which is interesting, right? So on a cash basis, they're not doing that bad. But it's something that could confuse you, that actually did confuse me when I was making a video, and I didn't realize it till now, is that when you look at the investing section, this shows you all the cash inflows and outflows in their investing section. So the investing section is when they buy equipment, like property, plant, or equipment. So it could be when they buy a physical warehouse or equipment. That's a negative. That's a cash outflow because they spent that money. If they sell equipment, then it's a cash inflow. So this is the sale of equipment. Proceeds from disposition of mineral properties, plant, and equipment. So not much sale of equipment, which is what you would expect. 3.8 million. No, wait. Yeah, 3.8 million. Because you expect companies to grow their business, not sell off their business. So that makes sense. But what can be confusing is that they acquired Yamana. So why do they have a cash inflow? Like, you don't, when you acquire another company, you don't get cash. You have to pay. So why did they have 259.5 million of a cash inflow? And now we just figured it out. Because as part of the acquisition, they did spend 2.8 billion. But this is not cash. The 2.8 billion is stock, so it's not going to show up on the statement of cash flows. They spent 2.8 billion of stock, but as part of the acquisition, like, the company had 259 million of cash in their bank account, so they get the cash. So that's why I'm glad I did this video, because when I made the video, I didn't know that, and I didn't have time to research it. But that's why they have a cash inflow from this acquisition. And then here's a cash outflow of 194.1 million. Cash disposed in sale of subsidiaries. So if you want to find out what that is, it doesn't really give it to you. We'd have to do a little digging. It should explain it a lot more in note 9. Hopefully. Note 9. I don't know where Note 9 is. Actually, Note 9 may be on another report. Or is it down here? I think it's up here. Here's Note 9. Okay. This might be from Mara. They sold Mara to Glencore. In July 2023, they sold 56% of the Mara project. That's a location in Argentina, to Glencore. On September 2023, they completed the sale. They received $475 million of cash and a royalty. They recorded the NSR as an estimated fair value of $90 million. The fair value of the NSR. The NSR. What is NSR? Okay. Or it could be Note 9. It also talks about other sales. The Morococha sale, it's a mine in Peru. They sold that in September 2023 for cash proceeds of $29 million. They also recorded an impairment of $42 million on that sale. KULR. KULR. Oh, this is really small. 100 million market cap. Does anybody know about this company? Okay, energy management platform. So they have a. It looks like they have some technology, like a platform for other companies to use in order to license carbon fiber thermal, which is used for batteries and electronic systems. So it looks like an EV play, right? So generally, these companies do well if they can partner with another company like a Tesla. If they just getting that kind of just getting some type of contract in place with a big company, even if they don't sell anything, could help their stock price a lot. Develops commercializes thermal management technologies for batteries, electronics, and other components applications in the US. It provides lithium-ion battery thermal runaway shields, fiber thermal interface materials, phase change material heat sinks, internal short circuit device, battery cell screening and testing automation systems, and tech safe cases, cell check. The company's technologies are used in EVs. Yeah, I figured it was an EV play. Energy storage, battery recycling, transportation, cloud computing, and 5G communication services. So 5G, that's also another big one. It sells products for applications such as lithium-ion battery, energy storage, EV, 5G, The company was formerly known as KT High Tech Marketing, changed name to KULR. Look at Simply Wall Street, $31. And 4 analysts have this at $255. But why don't they have much sales? Are they still in the kind of development stage? It's been a while since they had since they gave an update. August 2023. Corporate overview. 7 astronauts live aboard ISS. NASA trusts KULR with mission critical applications. So it's a 10-year project. Market opportunities. Mining, refining, active materials, cell pack. Energy storage systems, that's a big market too. Lithium battery fire incidents involving e-bikes, e-scooters, hoverboards, smartphones, and EVs are serious public concern. Yeah, it seems pretty risky. I mean, it's one of those stocks you can if they do take off, it could take 10, 15 years to see much results. Hey, Godskin, what's up? So their trailing 12-month revenue went from about 1 million and then the following year, 2 million. Then the following year, 5.5 million. But it's grown a lot for the following quarter. I wonder why they don't update their slides. It's so outdated. Like they don't have each quarter. You would think. And this is the kind of stock if you want to throw $1,000 into, but then after a few years you end up just selling it because it doesn't move. You have to kind of. It's a bit. Let's see their does anybody know about this company, KULR? Let's see if there's any articles. Okay, so it's going to report Q4 on. That was yesterday, right? Insider sold $219,000 of stock. This guy is selling a lot. Timothy Knowles, CEO, bought stock. What's it at now? 80 cents. Oh, that was a good buy. He bought it at 35 cents. Only 4.5% of institutional ownership. Timothy Knowles. He must be like the co-founder, right? To own 16 million, 12% of the company. He's the former CTO. That makes sense. He resigned, so he doesn't know. That's why he's selling off the stock. Sometimes it's good to see if any big companies own the stock. Well, Vanguard is a big. So the peak was $3.50 was the peak in November 2021. And the bottom was pretty recently. So it was around 12 cents at the bottom. So if you're a bottom feeder, this could have been a good time to get it. I mean, it's such a big run up the past month. It went up like what? It quadrupled in the past month. Why did it quadruple in the past month? CER Technology received acceptance of a compliance plan by New York Stock Exchange. New major risk, share price stability. So I guess there was a concern it will get delisted. Okay. So maybe this is why it went up. The company's submitted plan to regain compliance with the New York Stock Exchange was accepted. Oh, so they were accepted to continue trading. Because if your stock is below $1, you may get delisted. And this was in March 8th. So I guess it wasn't right at this time, but the company received a letter from the New York Stock Exchange saying that the company's equity, as reported, the quarterly performance was not in compliance. Okay. Oh, so that it wasn't a stock price. They had to have stockholders' equity of 6 million or more. So there's a lot of there's different rules to be publicly traded. So one rule is your equity on your balance sheet has to be 6 million or more. 6 million. If the listed company has reported losses, okay, which they do have reported losses. The company reported stockholders' equity 1.2 million and has reported losses during the plan period. The company will be subject to quarterly review to determine if it's making progress with the plan. Okay, so they're not off the hook yet. In order to be compliant with the listing standards, they need to have equity of above 6 million. So it was 10 million let's look at the quarterly. So you can see it fell. It was 8 million on 331. Then it fell to 3.5 million. Then it fell to 1.2 million. I mean, I would run, unless you're a bottom feeder and you're looking to kind of maybe time it, but I would run fast from this stock. Coastal Financial is a regional bank that runs the credit card operations for Robinhood and Walmart. Because they're probably going to get delisted. I mean, unless they dilute shareholders. They have to do a dilution to bring their equity up. Because they can't. The only way to bring your equity up is to make money, become profitable, or dilute shareholders. Because taking on debt doesn't help your equity. Because when you take on debt, it brings up your liabilities and your assets together. So it doesn't really help your balance sheet at all. But diluting shareholders does look better. You know, hurts the shareholders, but Coastal Financial. Coastal Financial. I think I've seen this before. It did really well, like most stocks did in 2021, post-COVID crash. It went from 10 to 50. But since then, it hasn't really done much. Ever since you had the argument with Dark Pulse CEO, I've been looking at the stock price. You know, I look at it sometimes too. It's such a garbage company. If anybody doesn't know, I did a video on this company called Dark Pulse, and the CEO commented on my video saying he's going to sue me for slander or whatever. Look at that. It's such garbage. It has fallen so much. It's because of me. I'm the reason. I actually talked to 2 lawyers just to confirm, and they said if he can sue you for making a video, then everybody can get sued. He's like, there's just no. He's like, the only way you can get sued and actually lose is if you do make a video and he can somehow tie the video to the stock price declining, which he can't. You know, if I had like a 50 million views, then he might be able to. But you can't. I could, you know, obviously you can't because I don't really have many views. See, there was a big. It was like it went up like 50,000%. The stock. It was like one of those meme stocks. It was like 0.000 penny. You know, it was like 1/1000th of a penny, and then it went up to 17 cents. And of course, everybody kept buying it, and people were talking. You know, because somebody posted my video on his Instagram account. And all his followers were like, I hate, you know, they were so like upset with me because they loved him because they thought he can make them money with his stock. But it was just a pump and dump. Like it was obvious it was going to come crashing down. Is it lower than it was? Before the crash, before the pump. So let's see. So in 5 years, the S&P 500 is up 76%. This stock is down 74%. In the past 2 years, this stock is down 98% in 2 years. I actually have I could show you. I'll show you guys his comment. I hope I didn't delete it. I don't see it on my phone. I wouldn't have deleted it. I don't see it. Yeah, I guess. Well, I could pull up the video to show his comment, but I had a picture of the Instagram post. He posted on Instagram. What a maniac. He's worried about somebody with and at the time I had even less viewers. I thought it was a good thumbnail though. Oh, here it is. The CEO. His name, Dennis O'Leary. He goes, the information. He didn't even speak grammatically correct. The information presented is fictional, at best liable. We've copied the entire video and have sent to our litigation team for review. And somebody wrote, Dennis O'Leary sounds like a crybaby, stating millions instead of thousands. Yeah, I did make a tiny mistake because I'm used to I was reading through Yahoo Finance, which states everything in thousands, and I kept saying thousands even though it was millions. But I did actually edit that part out after he made that comment, because I guess he was right. Reported for manipulation. I am sure someone paying you to bash DPLS. Look, this guy is such an idiot. Like one of his followers tried to troll me. He's like, I said that in the video. I said they have a microscopic market cap, and you can see their market cap is 7 million. At the time, it was like 30 million. I don't remember what it was. And this guy is such an idiot. He goes, with a market cap close to 500 billion. He's so stupid. It was 500 million at the time, and almost 5 billion outstanding. I don't know what that means. 5 billion shares outstanding. How that makes you a good company, big company. You don't know the meaning of microscopic. So I was like, when did I say microscopic? And who has a market cap of 500 billion? Because he goes with an MC of close to 500 billion. I knew he meant market cap, but I go, what is MC equal to market cap? And he goes, duh. And I go, well, you're the one who said they have a 500 billion market cap, which is only 99.9% off. And then his reply was, I said close to 500 billion. Relax and be more thorough. And I'm like, 500 billion or 400 million? Seems like the same thing, I guess. Such an idiot. I don't care if people are going to like, if someone's going to be a dick in the comments, you can't like be so ignorant. Like, he's like 500 billion or 500 million. It's like 500 billion market cap is like one of the top 20 biggest companies in the world. I felt like I was talking to like a 7-year-old. That's kind of like if you bring your 7-year-old with you when you're buying a car and your child makes the mistake. Did he say 30,000 for the car or 30 million? That's like this guy. He's just trying to like kind of like protect the CEO, trying to like needle me, but he knows nothing. Because 500 billion market cap obviously is wrong. Almost 5 billion outstanding. He meant shares, which doesn't even prove anything. I mean, the only thing that may make a little sense is they have 5 subsidiaries, which I wouldn't consider that a point where your company is good because you have a lot of subsidiaries. But it's just funny. And then somebody at the company at Dark Pulse, I guess maybe he goes, you clearly understand what you presented and you clearly understand it's false, misleading, and libelous. If you watch the video, he's just mad because the company's garbage. And I just said, and I was actually proud of this statement. I thought of this on this company. I was like, and I'm always objective too. I don't really try to give my opinion too. So this is how I explained our equity section. I said, so they raised, oh no, I think these are actual numbers. So they raised $2.4 million from selling stock, from selling their business. That's what paid in excess capital is that's how much money you raise from selling stock. And I guess you would add the 477,000. So they raised $3 million from selling their business. They took that money and they lost it all. And then they took on another 4 million of debt and lost all that money. That's why they have accumulated deficit. Accumulated deficit is how much money the company has lost historically. So they lost $7 million from running their business. I think that might have upset him, but it's true. I'm not that's their that's all they showed for their businesses, just losing money. Yeah, but that was interesting. That was 2.5 years ago, October 2021. The only reason I did the video is because someone asked for it, because the stock price went up so much. Yeah, I did it I did it around here when it was around 9 cents, October 2021, or maybe lower. I wonder if like, because when you go public, generally the stock price goes up, and then you can sell some of your stock, and so you can kind of get some money in the bank, a few million, for just going public, and then you just eventually go bankrupt because you don't have much of a business model. So simply Wall Street doesn't value the company. I'm sure no analysts value the company. Yeah, they have no analysts. And then so they were pre-revenue up until the only reason they got revenue in 2021 was because they acquired a company that had revenue. It did peak at 14 million, but it's coming back down. So you can see they have negative equity. They just have a bunch of debt on their balance sheet. He's still the CEO. He got a nice salary raise. He makes $285,000. That's pretty good for just losing millions. He just took $10 million from investors and lost it all. So that's pretty good for someone who's not doing anything. $167 employees. Yeah, I mean, it's hard. It's hard to grow a business. I mean, 7 million is pretty small market cap. The supermarket in your town probably is worth more than that. Yeah, who knows? Well, a lot of the employees could be from the company he acquired, because he did acquire a company that was generating revenue. Damn it! I wish I didn't delete that. I can't believe I don't have that picture. I could have sworn. I don't know why I would have deleted it. Okay. I didn't delete it. I don't know why I thought I deleted it. Oh, I think it's just not coming up in the search here. Okay, what's a better company? Home Depot? Oh, Costco. It's not even close. Costco is a great company. Costco is my second favorite company to invest in. So here's the Instagram post. Okay. So somebody posted my video onto his Instagram feed. So he said, this video has been screen recorded in its entirety and sent to our litigation team due to the grossly inaccurate information. Never present false and misleading information. And he wrote, don't want to promote the guy's YouTube and give him views. He either has no clue or he decided to purposely inflate numbers, which legal will be reviewing. He couldn't even afford legal. There's no money to. Now, I took a screenshot on my phone of this. That's what I'm sure they deleted it, but I took a screenshot, so I knew it was on my phone. I couldn't find it just before. Yeah, I'm not I don't like Home Depot that much. I think Costco is an amazing company. I guess I just don't like Home Depot because when I shop there, I just feel like, I don't know. I just don't like it when I shop there. I feel like I don't get good customer service, or I don't know what it is, but Costco, I love Costco. I wish I put more into it. I'm up 100% from my Costco investment. So it was 150 at COVID. Well, look how much it went up. Well, imagine getting it back then. It was like 50 cents on a split adjusted basis. That was in 81. Yeah, you couldn't have. You could never get it that low. Imagine they go bankrupt because of their lawyer bills to sue you. Right. They use all their money. That's why they're going to sue me, because they ran out of money paying lawyers. Yeah. Home Depot copies Costco's logistics. Yeah, Home Depot. That's a tough one. I wonder if there's any news about the company. Doc Pulse announced 10K filing. They delayed their 10Q filing. It looks like they always delay their filing. That's not a good sign when a company delays its filing. Something's signed a definitive business combination agreement to acquire Global System Dynamics. 40% of wildlife specialists has signed a letter of intent to acquire. They completed the acquisition. They do a lot of acquisitions. Let's see the. It was interesting technology, I thought. Investor relations. Looks like it's old, maybe. $133 employees across 6 facilities. So they're all over the place. They were founded in 2018. Oh, they were a SPAC. Yeah, that makes sense. Dark Pulse Aero launched. I wonder what people say on Yahoo chat about this company. Conversations. Well, it's less than. Well, that's a penny. That's 1/100th. That's a penny. That's 1/10 of a penny. So they're little less than 1/100th of a penny. So if you cut a penny into 100 pieces, one of those pieces is a share. This entire company was nothing more than a modified Fisher-Price Bright toy. No products, no sales, no inventory. Cannot finish start a project, no sales team. Big con game. Stay away from this. They got my 10K, or should I say Dennis? No, I'm just looking at the company. Like the CEO got upset with my video. Just curious of what people say about the company because I don't really follow it. Bankruptcy incoming. Big city tour guide CEO trying to sue his way out of debt. Yeah, interesting. Iran is now actually attacking Israel and drones and missiles. Yeah, it's scary. There's always so much conflict in the Middle East. Iran has launched more than 100 drones toward Israel, beginning its retaliatory attack. Yeah. Well, what effect will that have on stocks? I know Zim is an Israeli shipping company. Will that stock be affected? Probably, right? Yeah. Okay. Any other stocks we should look at? Any other ideas? What's the top gainers? Mobile Health Houston. Easy Go. I've seen that before. I hate this new. I wish I had the old Yahoo. Oh, here it is. Sable Offshore Corp. 659 million. Is this a midstream company? Okay, it's a oil and gas drilling company. Sable Offshore. I do. Yeah, Scott's Miracle-Gro. Yeah, it's a good. I like that company. They have pretty good financials. Sable Offshore. So they're pre-revenue. Okay. So there's not too much to learn, but Sable, Starbucks, United Healthcare. Sable Offshore Energy Project. So what's the plan? Are they just trying to acquire locations to start drilling? So there's been buying and selling, a lot more buying. 9 million shares have been bought. Fidelity owns 15% of the company. Sable Offshore. Yeah, it's really hard. There's really. Oh, because instead of buying. It's a nice picture. So they're an upstream company. Upstream is the beginning of the oil and production process. It's upstream, then midstream, then downstream. Upstream is the actual extracting from the ground. Since they do the drilling, that would make sense. Yeah. I mean, it's just, there's really no information except if you think the projects they have set up will provide ample profits. I guess if you have some knowledge on how to value these projects, which I have really basic knowledge of that. So management team history of value creation. Yeah, it's really Fox F. Fox Factory, 1.8 billion. I'd probably avoid any company under $1 billion. It's extremely risky. It's Okay, auto parts. Fox Factory is an American company best known for their Fox Racing Shocks brand of off-road racing suspension components. Okay, so started with Bob Fox. Ran a small business distributing suspension components for motocross bikes and with his other brother Jeff. In 1977, the company split into what became Fox Racing under Jeff Fox and Bob Fox's Fox Racing Shocks parts production company. It was bought by a private equity firm, Compass, and went public in 2013. Yeah, it seems like an interesting product, right? Revenue is down 1.6 to 1.5. That's not good. Why is revenue down? The cash flow positive. That's good. Yeah, with revenue declining, the stock is either crash, which it has. We got real high, 175. So it was 4 times the size 2 years ago, or 2.5 years ago. It came down to 80. That seems to be the resistance point at that point. Then it came back up and down. Yeah. Yeah, I try to find out why their revenue went down, because if it plateaus or goes down, they don't really stand a chance. Events, presentations. Purpose, challenge, possibility, pursuit. I'll wait, play. One plus one equals 3. So since it IPO'd, it's up 330%. Yeah, I guess that's true, right? I mean, it was up a lot more. Well, it was 2022 was the peak year, and then 2023. So the COVID year was 900 million. Then 2021 was a nice growth, 1.3. 2022 was a nice growth. 2023 was a drop. I wonder if quarterly is going down too. So this does, it doesn't look good. Revenue peaked in the second quarter. You would think the fourth quarter they'd have the best revenue. It came down in the fourth quarter. That's they're probably not going to mention in the presentation. So here's their revenue, 1.3. So why did it go to? So it says sales decreased 8%. The net sales decrease reflects a decrease of 43% in specialty sports group. And okay. The decrease in specialty sports group is related to channel inventory recalibration and to a lesser extent, lower end consumer demand. So just less sales. Yeah, you can see in their powered vehicle group, revenue went up. Revenue also went up in aftermarket applications. It's that specialty sports group, which was their biggest in 2022. It dropped in 2023. So if you think specialty sports group is going back up to where it was in 2022, the stock should rebound a lot. But if it continues dropping, and it did grow from 21 to 22. But yeah, Power Vehicles Group. Yeah, I don't know. I mean, it's hard to get too much information. Okay. A large portion of specialty sports group sales are dependent on the demand for high-end bikes. So maybe it's a premium product, I guess, and they just sold less of it. A material decline in demand for these bikes. Yeah, that's what happened. Yeah, just sales in their specialty. Yeah, I guess that makes sense. Specialty sports group would be more expensive than the other groups. So people are always looking to save money, I guess. But it's weird it went down so much. It would seem like something else happened. Like there could have been like some inventory problems or like manufacturing issues. But they don't mention that. It's this maybe this Marucci subsidiary that seems to be part of the group. Did that struggle? Okay. It's hard to tell. Probably down from interest. Yeah, it's hard to tell exactly why. I mean, they don't have to divulge everything. There's only a certain amount of information they have to talk about. It's an interesting company, Fox F. I mean, there might be something like a press release. You can find these on their website. They just summarized it in Simply Wall Street. Getting in cheap on Fox Factory Holding is unlikely. Their price target keeps coming down. So let's see what this article is. At the last week's 22% share price decline, the stock trades at a forward PE of 29. Average forward PE is 14x. So it's still trading at a pretty big premium. I mean, that it's pretty high PE. The company's forecast to post earnings, because as you know, the market is perfectly efficient, right? So all information is built into the stock price. So you can't make money the market, because it's like the EMH, the efficient market hypothesis. So no matter how much due diligence and work you do, you can never outperform the market, because it's perfect, right? Is that right, or am I misstating that? Yeah, but these are good companies to look into, because it makes sense. I could understand it. Those up, companies pre-revenue, I don't really have much to work with. Rig is another highly diluted stock. It's not that low, the market cap, $5 billion. Transocean. Revenue just is flat. Yeah, they're always seem to be struggling, this company, right? Look at how much it peaked at 170, and now it's down to $6. Iranian attack looks pretty bad, in the sense that every country in the Middle East is getting involved. Oil prices probably shoot through the roof. Yeah, that's true. Oil prices, that's what happens, right? I guess in the Middle East. But the thing is, we're not as dependent on oil prices as we were. In the 90s, during the Gulf War, it was so important, because we relied on oil from other countries. Now we produce more oil than anybody else. So LECO, Lincoln Electric Holdings. That's a nice steady revenue growth. What's going on? Why is this freezing? I don't know what's going on. So LECO, Lincoln Electric. It's as a steady growth the past 5 years. They pay a dividend. It was $6 in the 90s. Now it's $200. Tools and accessories. Lincoln Electric Holdings. sells welding. You said wielding. That's why I was wondering what wielding was. Welding. Okay. Sells welding, cutting, and brazing products worldwide. Brazing. What's brazing? Brazing versus welding. Is brazing as strong as welding? No, it's okay. I do that all the time when I type. Brazing is ideally suited to the joining of dissimilar metals. You can easily. Did anybody know? I've never heard of that word before. Brazing. Well, I've heard of brazen. If you're brazen, like you're confident or impulsive, or I don't know. You're brazing. So this is brazing. You can easily join assemblies that combine ferrous with non-ferrous metals and metals. So it's like welding, but different. What is brazing in simple terms? Brazing is the process. Okay, same thing. The filler metal has lower smelting. Brazing, it's just joining two pieces of metal that involves the application of heat. So it's like it's welding, but different. I don't know. I guess we don't really need to know that. I was just curious. When I was a brazier at Invacare, we used brazing to put pipes together to make wheelchairs. So you definitely know what brazing is if you did it. That's cool. That sounds like a fun job. Yeah, with a bridge collapsing, you would think a company that does brazing, and they've been around since 1895. That should give you a little more comfort. The thing is, we always find these stocks after there's all news about the stocks. Like it's always after the fact. But if it is soldering with brass, okay, that's helpful. That gives me a good kind of reference point. But even if I was to tell you about this company, just same thing. The same thing with Amazon. If I was to tell you about Amazon in 2001 after the dot-com crash, like it's just. But I knew about Apple in 2015, and I remember Apple was a tenth of the price in 2000, like maybe 2012. It was only 200 billion market cap at the time. It was still a massive company, but I guess it's easier. It's easier to look backwards. Everything's simple. Everything's 2020, right? So he makes. So I don't mind someone making $800,000 a year if they do a good job running the business and make a profit. Look at all those insider sells. Lots of selling. Lots of institutional ownership. Vanguard, Norgus. It looks like a good company that we kind of missed the boat on, but it's hard to really tell. I think if you like a stock, you like a company, I say just buy it. If you can't really wait for the right time. Everybody says, "Oh, I can't buy Microsoft now. It's so expensive." But you could have said that about at any point in time. Great companies, you could almost always say that. Oh, I'm not going to buy it now. It's too expensive. Lion Electric. I am biased because my dad worked there for 30 plus years. They recently switched from being employee focused to investor focused. No, it looks like a good company. Like it looks like there's nothing like, it's straightforward. They generate good revenue and it's growing 2.6 billion to 4.2 billion. They're profitable, a healthy profit margin. They generate lots of cash. It looks like a kind of one of those pretty solid investments. You're not going to 4 or 5x, although you could have 4 or 5x if you bought it 5 years ago. Who would have thought, right? I mean, it's only 14 billion. It's not a massive company, but it's a good size. It's a good size where it's not too risky. Well, you could have. I mean, how would you have known this? But $7. So you could have 30x your investment. But it seems like most stocks, they just it is just like this huge run up. I mean, from 2020. So from 1995 to 2020, it went from 6, it 10x, which is nothing to look down upon. But there's always just massive run-ups with stocks the past few years. It looks like a pretty good stable investment. You get a dividend too, so but the small caps are just not doing that well. Let's look at the Russell 2000. Like if you put money into these small caps are what, like 3 to 10 billion, like that range. It's actually, I mean, I guess from COVID, it doubled from COVID, but I guess what hasn't? But since the end of 2020, it's flat, and it's down quite a bit from October 2021. It's the large cap stocks, just it pays off to invest in these big companies. Look how much better in 5 years the S&P is up 77%, small caps 28%. In the past 2 years, of course, we can't even see the chart, but so small caps are only up 28% in 5 years. That's like 5% a year. In 2 years, they're up 28%, while the S&P is up 77%. The past year, only 12%, while the S&P is up 25% in 1 year. Year to date, they're only up 2%. They're up 17% in six months. That's good. It just doesn't pay to invest in small cap, right? They don't perform that well. What's the definition of the Russell 2000? I don't know. I know it's 2000 small cap, but I was wondering what the range is. I guess Okay. Is that 3 to 10? Small cap. Okay, it's 250 million to 2 billion. Okay. So even less than I thought. 250 million to 2 billion. 3 to 10 must be mid cap. Mid cap. 2 to 10. 2 to 10 is mid cap. And large cap, I guess, is over 10. So this is the price return, total return. 2022, well, I guess most stocks are down in 2022. Does anybody invest in the Russell? The Russell 3000, it measures the performance of the 3,000 largest. Oh, it's the largest. Oh, okay. I thought Russell was okay. Russell 3000 is it's like the entire U.S. market, I guess. The 2000 are small cap. The smallest 2000 stocks. It makes up the smallest 2000 stocks in the Russell index. I don't even recognize any of these companies. Supermicro is in there. Well, they're probably not part of it anymore. What's the Russell 1000? The highest ranking 1000 stocks. Highest ranking. Apple, Microsoft. Okay, so these are big companies. Okay. Okay, well, I guess I gotta finish something up. So yeah, thanks for joining another long stream, and hopefully it's a good week right ahead for the market. And yeah, have a good night, everybody.